Let's get things ready. Yesterday, the stuff we did as a group over
1
here.
minute before the release, stand by.
So the stuff we did as a group was over here inside that box there. Whatever trades you did in the afternoon, my trades in the afternoon ended up breaking even over here. This morning, I'm starting after the news. So I'm waiting for the news to come out, right? You know, it's on the schedule, it's on the docket. Right? We have all of this here. So we have about 30 seconds to go. Let's just wait that 30 seconds out. And then we'll see what happens, right? We want to trade the reaction.
10 seconds before the release, stand by.
The ISM is really the one we're looking for. Service economy. There we go. See, came in under, and the euro is taking advantage. Okay, so let's see what happens here. Give it a couple of minutes, you know, a 5-minute candle, a couple of 5-minute candles. And then we might be selling as we were hoping to do yesterday. There's that 980 we were looking for. Right? Remember yesterday we were looking for this 980. Right, so here we are. Right? We'll probably turn into sellers up here. Right, so let that play out. Let's just measure. Right? When we get to the point where we're unable to fulfill the box, when we're unable to complete the full box, we'll have an idea that, okay, maybe now it's turning over, right? And so we'll be able to see its inability to continue, and we'll have a clue, you know, just like right now, it's having a tough time going up to into the next box. Ooh, ooh, ooh. Oh. Right, so we're just looking to see if it can fulfill another average, and it looks like it can't. Right, so let's see what happens here. If you want to sell, you're selling for 3 pips, 3 pips, 3 pips. All right, so take a sell there. I'm selling only because we can't get to the top of the box. Right, so now going back to our real, 3 pip process, we have to go and check out the daily chart. Right, so looking at all of this, we're coming in on schedule, top of the hour, 30 minutes after the stock exchange is opened. Right, we've experienced the low about an hour and a half ago. Now we're experiencing the high of the day. And like clockwork, we're coming in near the high of the day, and I want to sell into the high of the day. Right, so if we just look at the size of this candle, it's already 112 pips. The average is 75. I want to sell just so I can make the 2 pips, 2 pips, 2 pips, or 3 pips, 3 pips. My target is set for 3. And so I'm selling because I doubt that it will move more and more and more boxes. Right? You can see how it's having a tough time completing the current box. Right, so already we're closing some winners. All right, so if it pushes back up, we want to sell. Now, going down to our normal hourly chart, right? We have a floor. We have a ceiling. on an hourly scale. And now on an hourly scale, we have to assume we're here for 2 hours forthcoming. What's the market going to be doing in the next 2 hours? Right. So you can see this, you can assume this is bigger than average. Some of this might have to be given back. No, that's one assumption. We can also continue, and make it a bigger daily candle. Where will it go? Where will it stop? Probably somewhere into resistance. I'm assuming we're already there, right? I'm assuming 112 pips or 25% bigger than average is plenty. And so if we go down to our 5 minutes, and now you start building the ladder between your floor and your ceiling, and you're using left, you're using stuff on the left, you're going to realize you're going up and down this ladder over time. And then this business of, the ladder gives you directionality. It tells you how many boxes you've moved in one direction, how many boxes you've moved in the other. And you already expect to be moving 3 to 4 boxes on average, right? So if we're coming down through these rungs, it would make sense to come down 3 to 4 rungs, right? That's just normal market behavior. Anything can happen. It could be one rung. It could be 6, right? We're targeting average moves, right? So up here, I want to sell. If I see that green candle up here, like that, 3, 4. I put all 4 clicks on that one green candle. So let's see what happens from here. We've had a successful week, right? Every session we've had on schedule has come back profitable. We understand where the limits are, and we understand how to manage this empty space up at the top there with more risk. Same size, we're just spreading it like you spread butter on toast, right? It's allocated for this, right? So this space is not scary. It's meant to be exploited. This is why I have a long tail stop, right? That's to protect the account, not to close the trades, right? I will close the trades when I'm wrong. If I believe that I'm wrong, right? So up here, we want to sell that, right? I took one trade there. Now I have to wait a few minutes and see if I can recycle some of these trades before I can take more, just like this. Right? When we're looking at gold, a similar behavior should be happening there. All right, gold is the other instrument that I look at once in a while. Right, just want to keep repeating the same process, keep recycling the same trades that I've allocated. Right, so yesterday, when we traded this system yesterday, we were pretty well at this same level. Oops. We were right there, right around this 960, 970, right? And here we are just a little bit further. One, two, three, four, 5, 6, 7, 8, 9, 10, 11, 12 standard deviations from one extreme to the other. Selling the tops of the boxes along the way would have made 3 pips along the way. Buying the bottoms of the boxes along the way would have made money also. Right? The bias only helps us. It's like the wind in our sails, right? You can still get your sailboat to your destination if you're sailing against the wind. Right. So I want to sell now that I'm in this lower box here. I'll take a trade, but if on a green candle, right? Something like that. That was green there for a second. Right. And looking at our 5 minutes, looks like we're going to be going down to the next rung on our ladder. Right. So let's just see what happens. It could be trying to keep going up. Right. It could very well be trying to keep going up, but we're here for a certain amount of time. And we know the average day has been fulfilled already. And so our certain amount of time, will it be spent extending the day candle, making it even bigger? Or should it be spent where the probability is pulling back a little bit? Right. So this is where we want to sell. If you have the clicks, we're at the top of the box. All right. So I put my 4 clicks because they belong in that box. Right. If we go and notice on a 1-minute chart, the average daily range right now is 7.5 pips per bar. And my target is 3. Right. So if I am picking off resistance, it bounces into my favor within the bar. Right. So if I'm selling this and that is resistance, the next bar, which is 7 pips on average, should close my target. Right. So I'm just using the time of day to optimize where I am and the probabilities of making that money. Right. There's no guarantee, but it's probability driven. Right. And then because the probabilities sometimes are faster than I thought or slower than I expected, I'm giving myself space and or no, which is equal to time to get the job done. Okay. And then if we use again time to stop trading, so we're not over trading every day, you get to keep those winnings. Right. So far we've had a few, actually we've had multiple winners. We just have to continue to build a position in that fashion. Right. I'm just waiting to see if we can go a little bit higher. Breaking that previous high would be nice. Right. Just like so. Keep it going. So the box is a frame. It's a security blanket. It lets me know that I'm in the safe space. You know, if I'm unable to get to the top of the box, there's a pretty good chance we're going the opposite direction. Unlike this, where we blasted through the boxes. And again, this is slowing momentum up, right? And so it gives you an idea that this is not going to the moon. right? We're losing speed along the way. We're losing steam along the way. And so right here, I would probably want to re-enter the same clicks if we can get up to the edge there. Right, top edge of the box, something like that. That's one. Just waiting to see if I can recycle some more trades. Right. So the plan we had yesterday was delayed 24 hours. Mm-hmm. And so we're still doing the right things. We just have to do it in context. Right? Anything green or expensive, so to speak, we have to sell it. Right? Trying to predict the news would be a disaster every time. And so we create an alternative, right? We create plan A for the most likely outcome, and then you create plan B just in case, it's given to you. And then the facts come out on schedule a year in advance, right? It's on schedule a year in advance. So you know exactly when these news events are coming out. And you get to choose whether to participate or not. The wiser choice is to wait and trade after. Right. So I'm still waiting to see a green candle so I can sell more. Right? I want to sell expensive, like the top of this box right in there. If that little nubbin candle can retrace a little bit, I'll sell it like that. Okay. So this move right here, we've gone down 27 pips, 3 boxes. Right. So let's assume we're resetting the boxes to measure this most recent down leg. I'll move this one over here. And then I'll put this one here. I'll put this one there. I'll put this one here. Right. So from the top to the most recent low, 3 boxes. And now we're floating in this bottom box. Right. There's a chance it goes back up. What's the probability that it makes a higher high? Right. It's still there. It's still a viable trade. It's still a viable option. We have to protect, what it is we're trying to do. And so if I'm a seller from this high, I want to sell the top of the next box, the top of the next box, and ultimately the top of box number 4 if I must. Right there, right? And so by the time I get here, I'm also approaching my stop losses, and I've been wrong, or I've been in drawdown for 4 standard deviations. Right. So it's the way that I behave within these 4 standard deviations. And by picking the dominant side, the most likely side, you make your money faster than otherwise. Right. Let's see. See if it comes back to the breakout area. All right. If we get back to that breakout area, we might be buyers down here. Come on. I want to sell higher, not when it's, in the middle of the box like this. Right? I'd be even more committed to selling if it gets up here. Right. So it's this commitment thing. I want to spend the money that I have to spend, but I want to do it at the right place. Right. So if we look to our left, we have stuff like this. Oops. Let's draw it the other way. We have stuff like this. Right. So that would be a good place to take a trade, like so. One. And if it pushes up a little bit more, right? We just want to be recycling the trades we have, accumulate a few winners. Each one is a 3-pip trade, right? So right now we've gotten about, well over 20 pips. And so within your 2-hour session, depending on the value of your pips, you've been making money every day this week. And you have to earn the right to scale your account. Right? Just because you doubled the account doesn't give you access to 2% instead of 1%. Right? So we just want to repeat this same little process, right? The bars are bigger than our ask. Right? I'm asking for 3 pips, and the bars are 6 pips. And so if I pick off the right location, I make my money almost instantly. We want to repeat this behavior daily and on schedule. It's a business. There we go. It goes up a little bit more right there. It pushes up again, into the line itself. Comma. I want to spend the money, but I want to do it logically, like that. Oh, it's a little bit even better. There. So now I wait. I have 4 clicks. I'll open the 5th one if we get up into this zone right up here. Just waiting patiently. Right. So if we look at the dollar index, the dollar index is coming off of its high as a result of the news. The yields are coming off the highs as a result of the news, right? But this is not going to the South Pole, right? And so we know destination is limited. The scope of the move remaining for the day is limited, and we're playing off of that limit, right? We expect the upside to be very, very limited, and we're going to be attempting to make the money or continue to make our money on the downside. And so what we're literally doing as a group, at this time of day, right here, right now, up here, is we are building the wick on this daily candle, right? So at some point during the day, the high will be set in and we'll have fallen off that high. And that fall off of the high will have made us the money. And so we're just trying to determine if this is it. And if it pushes up a little bit more, I'll sell a little bit more. I have 4 boxes of sells. right? So I'm allowed to sell 4 boxes in order to create this wick, right? It's a green day, but I'm selling it, right? Because I see this green day is already bigger than the average, and it's likely not going to the moon today, right? So the limitations of today is what I'm exploiting, right? So up here, I'm putting a click. Now we wait. If we make a higher high, that's okay. The size of the boxes doesn't change. You can clearly see the bars themselves are very, very different right now as opposed to, hours ago, right? So it's this timing thing. There's volatility, it's in the moment, and it's not here to stay. And this is why we show up at this time and we exploit the volatility that we have access to, right? And so if it does continue and continue and continue and continue, I may be forced to take 1 loss or 2 or 3 or 4, right? And hence I'm slowing down my clicks. We don't know. Right? So if we go to that daily chart, look to our left, where did we manage to find our way to? Right? So the market found its way here. Right there, right there. If we do a Fibonacci on this, I'd be curious to see where we are as we speak. We are beyond the 38% and we are approaching the 50, 1.1. Okay. Right. So we know limits are in front of us. We know limits are below us. There's a floor and a ceiling on every time frame. And because I'm limiting myself to 2 hours of outlook, my 2 hours of outlook is limited in scope, right? I'm not going to the moon. And because I'm looking left, the probabilities are I'm probably coming down instead. And so I play that probability through this lens. We call it the ladder, right? And so this lens, this ladder tells me what's happening, right? We're breaking levels in one direction versus the other direction. Yeah. Yeah. If someone's asking if 12 boxes is normal, yeah, that's the body of the candle, right? That's a day beyond average. That comes once in a while. That's how you create an average, right? You have to have bigger and smaller. An average is somewhere in the middle. Well, today happens to be bigger. But it's still confined to boxes. It's not a runaway train, right? It did stop. And so the idea is that we have to limit ourselves because otherwise you're going to click and click and click all through those 12 boxes trying to catch that top, which didn't, we would have been wrong 3 sets of 4, right? So this is why we have a long tail stop and we commit to it. If I'm wrong at 36 pips, I'm not going to fight that. I'm probably going to switch things around. Right. So it is in the moment. You have to see what's happening, what led you to this, and how can you get out of here? What's left of this? On a day like today, I would assume it'd be a safe assumption to think that the big event is finished. Right? Now it's a big sigh of relief. And we're just waiting for the participants, right? Look at time of day, look at where we are. Things are unfolding as they normally would, except we did more work in less time. right? Straight up like this. That's not what you see very often. Okay. And so picking a bias is one thing, but actually committing to risk management is way, way more important. Okay. And so in the chat room this morning before the live session, uh, right around the first set of news that came out, I was shorting the market up to 940. And then when we broke 940, I reversed everything and started playing the long side until we got to the top. And then the live session started, and I've been trading the short side ever since. And so, but yeah, it's situational, right? You can't just marry your bias. You have to change, you have to adapt, and the news may be the catalyst for that change. Right? So bottom of the hour. So it's been 1 hour exactly since the stock exchange been opened. Right? 30 minutes since the news came out. And we seem to be pushing away from the high of the day. Let's see if we can keep that going 3 pips at a time. See if we can recycle some of these trades. The bars are starting to shrink. All right, we're now down to 5 pips per bar, which is more in line with what we would expect to see at this time of day, right? It doesn't stop us from making money. It's just going to slow down the money, right? Instead of receiving it within seconds, we're going to be waiting a minute or so, right? I'm selling at resistance. If I look to my left, right around here, at this level, all of this zone here, this. There we are. Yes, that's what we wanted to see. All right, so considering where we are, how much time is left to the daily candle, how much has already been completed, we have to assume, going sideways might be in store for us, right? And that's kind of what our favorite environment is. And so you define your risk, right? You know your ceiling, you know your floor, and you don't want to play ping pong. But considering what's been happening, if you play one versus the other, if you play ping, 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 or pong, 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 you're better off, right? Because and a move is likely still coming. Something is happening. Something's unfolding, right? We know the market is trying to do something. Whatever that may be is going to lift all boats. And that's the idea behind doing the top-down analysis, right? You want your boat to be one of those. You want to be lifted along with the tide. You don't want to be fighting the overwhelming, uh, you know, uh, outcome that the market has in store, right? So we're using time of day and location to determine if the market has accomplished what it had in store. And then if you suspect, it's unlikely that it has more to do, you start to play the way I'm playing here, right? I play the opposite, right? It's clearly a bullish candle and I'm clearly selling, right? I'm not selling because I think it's going back to the South Pole. I'm selling because of the location, right? The location makes me or gives me access to this wick. And in this wick, this going up and down of the wick is what's making me the 3 pips, right? So in this wick, this fluctuation, you could be short for 3 pips, or you could be long from 3 pips, right? But you have to do it at the right side of the box. If you're long, you have to buy the bottoms of the boxes. And if you're short, you have to sell the tops. And there will be a point where it's the end, it stops working. That's when the bars have shrunken below your 3 pips. And now you're sitting on things for 6, 7, 8 hours, like I had to do last night over here. This section here, all of this is 7 hours of sideways. And so that took me forever. Right. But we want to be done within 2 hours. Right. This is why we focus on trading in the morning or trading that 2 hour window that you have access to. So we define the risk. And then with that definition, above and below, you play within. You pick a side, the most probable side, and you ignore the other side, right? You don't want to position yourself on you don't want to open yourself up to a mistake, a possible mistake. So it's all about probabilities. Right? Something up here might be worth selling. Right? We do have 3 more boxes worth of money. Let's go double check this again, just so you see what I'm talking about. The dollar index, DXY, on the daily, we're pulling back. Right? Yields on the daily, we're pulling back. Right? But it's not going to the South Pole. That's kind of what we have to keep in mind, right? These moves, because of time of day, the moves are very limited in scope. Our brain is a runaway train. Our brain will take a trade and expect 300 pips out of it, right? That's days. Days. That's a week. That's over a week. And you can get 300 pips doing this kind of stuff a lot faster. That's what we want. Lower highs. We're still in this kind of wedge and triangle. If we go back to our 5 minutes, that ladder we built earlier should start to come in play now. Right, so we determined all these levels about 40 minutes ago. And let's see how the market behaves through these levels. That white dotted line is the average of my trades. Right? If the market keeps pushing up, I myself will bring that average up with it. Ultimately, I do want to sell. I do want to be participating in the wick on top of the daily candle, right? So that's all I'm trying to do here. This whole idea of trading for the hourly candles and only being here for a couple of hours is because I don't think this is going to the moon, right? So whatever is happening up here, I want to be a seller of it. And on the 5-minute chart, I can see that unfolding if I can see the price go through the rungs on my ladder. right? If it keeps going up, we have limited monies. We still have boxes to spend, right? And we still can manage to average the position, right? It's a position that you're building, and the outcome is in one particular direction, right? It can still find its way to 1.1. There's nothing that says it's not going here. We don't know what the market has in store, right? All we know is we've done more than an average day of work. And so how much more can we expect, right? And so the longer it tries and all that kind of stuff, it starts to wear you down, right? It starts to eat up at you. It eats you up. The patience starts to wear thin, and likely you'll close your trades seconds or minutes just before that big move you wanted. I'm sure we've all felt this, right? The market is using time, patience, or the lack of to piss you off. Don't give up on a good plan. Give up when you're proven wrong. So this is what we're looking for. I want to come back about 3 boxes from the high. 3 to 4 boxes from the high would be an average move. And within this average pullback, we would expect an average sideways market because it's Friday and we're finishing the week with nowhere else to go. Right? We've done the work for today. Right. So limited scope, very limited, to a couple hours outlook. If I was trading 4-hour candlesticks, my outlook would probably be an 8-hour shift or a 12-hour shift. Right? If I was trading a daily candle, I'd probably be wanting to hold on to those trades for like a day or two. Right? It's my goal is to bounce on any time frame, right? So I can bounce on an hour or I can bounce on a 4-hour. And the result of that bounce, so the candle that comes off that bounce is what I try to make. So on a 1-minute chart, I'm making 3 pips, right? On a 4-hour chart, a bounce would earn you 27 pips, 3 boxes. Right? On a daily chart, the bounce earns you 75 pips, right? The daily candle. And so we're picking off bounces. The resulting candle is mine to keep. And if it fails to bounce, that's for me to fix. All right, so right up here, if it gets into this box, it opens me up to spending 4 clicks, which are allocated to this job. Right, so that's 1. If it pushes up a little bit more, I can open a little bit more trades, like 2 or 3 more trades. Right there would be 1, right? I'm looking at this area here. Let's turn off the deal map. There we go, so I can see better what's happening here. All right, so I'm hoping to sell around here. I have 2 clicks left, 2 clicks left to spend in that box. So 15 more minutes, and just to go over the plan real quick. In the next hour or so, we expect we'll have found the high, right? We will have tested some kind of resistance. We will have found the high of the day and start to move away from that. We will see that unfolding as we start to go through the ladder that we built. right? And then on that 5-minute chart, you want to see yourself coming off of that high 3 to 4 rungs. And that would be a good place to maybe initiate trades in the opposite direction if time permits, right? Only if time permits. It's bouncing between boxes, right? And you pick a side and you play your bounces until time is up. Right? So yeah, the system does not change. It's adaptable and it gives you freedom. And I think the freedom will give us almost opportunities to create mistakes, right? It's almost too much freedom. And through experience, through poor judgment, you learn what not to do. Doing it this way, you learn what not to do very cheaply. All right. It's cheap to make mistakes. Let's turn the deal map back on so I can see the winnings. There we go. This is what we've done so far. All right. By the end of the day, we would expect to be down here somewhere, or at least have visited this level. All right. If those of you that haven't visited the YouTube channel yet, go check it out. Like, comment, subscribe, all that stuff. Ring the bell, like they say. Right there, I want to sell on that green candle. I'm only recycling the trades that closed minutes ago. Right? And I still have 2 left. The bars are still steadily shrinking. Right? The bars are now 4 pips each. Remember, they were 7.5 about 45 minutes ago. Then within an hour and a half, the bars will likely be smaller than our target, and it will become tougher and tougher and tougher to make money. Yeah. So if we can close these trades here in the next 10, 15 minutes or so, the book will be flat for today and we'll have had a winning day every day of the week. And by stopping trading every day, we get to keep our winnings every day. If I sit here and I overtrade or I forward test a strategy longer than expected or longer than I should, I end up creating a problem, and sometimes it's irreversible. And so the trick, the illusion is the time. They're using time to screw us up, right? Like this, nobody is ready for something like that, right? It's when you've been trading stuff like this, when you're subjected to this, that it destroys whatever it is you've been doing, unless you do it in small, achievable, repeatable pieces, like Lego bricks. We're using Lego bricks. This is my Lego brick. And I'm using time of day to avoid stuff like that. Right. So you show up after the event and you make your money right there where nobody else is willing to. A lot of people are buying up here because they think it's going to the moon after all of this. And who are they buying it from? Us. Right. So it's this thing. Somebody has to be right. Somebody has to be wrong. And my probabilities tell me I'm likely going to be right. Right. Whereas the probability of this going up and up and up and up rely on more data, right? We need more data to know if this is gonna keep going. As far as we know, today's finished. Right? Just because of the size of the daily candle, right? As far as we know, today is 122 pips, and the average is supposed to be 75. Right? So we did 50 more than normal. Yeah. Right. How much more can we expect? So when we come on Monday, maybe we are going up here. Right? Maybe we are going to 111 or 112. Right? We'll have to find out one day at a time. Position yourself where you think, more work has yet to be done and go in that direction. All right. When you're on the hourly chart, look left and see what average moves look like. And this today is clearly not an average move. Right? That should be a pretty good clue that something's afoot. Right? So we'll keep that in mind when we come in. Right? Maybe we are testing resistance. Maybe we are going much, much, much lower, which is what I think is happening. I'm thinking the euro will find resistance somewhere in this area here, right? In this zone that we are in right now, where all these little wicks are. I'm thinking we're going to be bouncing off of this and making lower lows in time. But that's me and my favorite sports team, right? I favor the US. I always have. I have a tough time being long the euro any extended amount of time. It's a psychology bug, right? It's my favorite sports team, right? It's hard for me to bet against the US. So here we are, trading the facts instead. Right? Green candle, sell, boom, boom. And back to my 4 trades. Just want to recycle and then be done with it. If I can close these trades right now or in the next 10 minutes or so, I'll be able to call it a day. So going back up into this box opens you up to the clicks that belong in this box, right? And so if you want to, you can expect to find resistance somewhere, maybe here, and sell that. Like so. If it pushes up one more or to the actual level, right, in that zone there, why not put the remaining clicks? Right? The key is to remember not to chase stuff. You're playing for the next move. When something's going up like this, in my mind, I know it's not going forever and ever. And so I'm attempting to locate or pinpoint when's the best entry. And we've been told not to do this. And so that's where the dilemma is, right? We've been told not to pick tops and bottoms. I'm not doing it on purpose. I'm picking off support and resistance. It just so happens to be the top or the bottom, right? I'm looking left for support and resistance. I'm not structuring a trade on purpose to exploit the very extreme. Right. I'm just waiting to see the level. If my level happens to be the high of the day, well, I'm not gonna say no to a good trade. Right. But we've all been told to not do certain things or to only do certain things. Like you must have a 2-to-1 risk to reward ratio. And that's a big lie. Right? It's okay to target 2-to-1 if it's offered and you see it and it's a plausible trade. There's nothing wrong with taking it. In the end, you do this for months and months and months, and you look at your statistics, you're going to be closer to 1-to-1 or 1.5-to-1. Right. So by the time everything comes out in the wash, it's not 2-to-1. Right. A lot of guys will take half off and let the other half run and all this kind of stuff. Right. So it's very difficult to actually physically commit and get 2-to-1. Right. Risk management is still paramount, right? You may set it up with this big dream of receiving twice your reward, but you still have to manage the real risk. And so if it only gives you half the money you're looking for and it's turning back, take the money. Right. So yeah, this is the problem I have with swing tradings. I'm willing to accept drawdown. And so when the swing trade is going favorably and then it starts to pull back, I'm allowing that pullback. And sometimes I allow much too much of it. And so I give back winnings, I give back profits instead of booking the swing trade in box 3 or box 4. Instead of booking it when it was worth booking it, I give it too much space. And so I'm better off doing this 3-pip business. Right? Where my space is constant, my profits are always the same. I've kind of removed the variables from the system. I remain the last variable, me and the source of data, right? The market itself. Right? So on our 5-minute chart, how does that ladder look like? All right, we're approaching a bottom rung. So we're going down the ladder, apparently. Let's see what happens next. Give this a few more minutes. We've had winners every day this week. We've contained our sessions to a few hours per day. Ideally, the losses that I took, I think it was yesterday or the day before yesterday, 4 11-pip losses. I made that back within a few hours thereafter. And so that's the kind of trading we want to get into, right? We're not afraid to fall off the horse. And if we do fall off the horse, we get back on the horse and we don't deviate the process. We don't change the process to make up the loss, right? The process remains making 3 pips, and that's how you recuperate from the loss, 3 pips at a time, right? So before, it used to be all about revenge, right? If the market took 11 pips from me, I needed 12 to feel good. And I did everything wrong in order to get that 12 pips. And now, if I lose 11, I couldn't care less. I continue to do 3 pips. And then within 3 or 4 trades, that loss is gone, right? So it's the psychology of the process. I'm a monk with my process, and it delivers the results I'm looking for. If I become excited or overly excited, then I'm opening the door for mistakes. I'm leaving things running. I'm closing things too early. I'm doing stupid things outside of the parameters of the strategy, right? So yeah, focus on discipline and breathing. You'll be okay. Right. So I'm just gonna let you guys go here. I'm gonna, wish you a good weekend, and I'll see you Monday to do the same thing, same time, same bat channel. All right. Trade safe. I'll look to upload this video sometime in this afternoon. All right. Talk to you guys later. All right. Don't touch your stop losses and don't touch your take profits. Leave everything the way it is. Bye-bye.